And here's another one from, really another two from Zero Hedge. I'm going to combine them into one because they kind of go together. Dow Jones ties worst losing streak in 40 years. And what was this I heard the other day? The GE's being removed from that index? In 111 years, I think they said, of being in there, we're going to go ahead and remove GE now. Isn't that funny? You just take a company that's not performing. Let's, hey you, come here, get over here. Who, me? Nah, your Aunt Tilly. Yeah, you, get over here. Christmas story. GE's out, you're in. Put me in, coach. That'll fix it. Dow's gonna rock it now. What are you playing, musical chairs? Dow ties worst losing streak in 40 years. The brief respite for Chinese stocks disappeared overnight, by the way, and it appears to finally be leaking into American stocks too. The Dow closed red again for the 8th day in a row. There has not been a longer Dow losing streak since 1978. The Dow was down over 1% year to date, while NASDAQ is up almost 12%. This is the worst year-to-date divergence between Dow and NASDAQ since 2009, and you know what happened back then. Is the short squeeze over? Most shorted stocks suffered their biggest down day since April 6th today, but even then they tried to squeeze the open. Note this was only the second day or down day for the most shorted stocks in June, down 3 of the last 21 days. Another day, another dip in the FANG stops, Facebook, Apple, Netflix, Google. Another day, another dip for those. Amazon was down, but nothing like as bad as many of the other online retailers, etc. VIX trading back above 15 today, and as we suspect, the volume term structure is starting to wake up to the looming reality of the actual imposition of the trade tariffs and retaliations. Moving on to the other one I want to talk about, because what I just told you means nothing. You're going to find out we could have a massive crash in the stock market, and it's fine. The banks will hold up just fine. Quick, we have a horrible Dow day and market day elsewhere too. So Fed, let's put a little news broadcast out that everything's going to be all right. Ooh, child. Everything's going to be all right. Fed finds all 35 banks will be fine if stocks crash by 65% and VIX hits 60. The Fed has released the results of its most recent Dodd-Frank stress tests. All U.S. banks were expected to pass and are likely to lift the amount of money they send to shareholders via dividends and buybacks. But as Bloomberg notes, eyes are on smaller banks, which may have better than anticipated results in capital plans. As a reminder, in the severely adverse scenario, asset prices drop sharply in this scenario. Equity prices fall 65% by early 2019, accompanied by a surge in equity volatility. The U.S. stock market volatility index, or VIX, moves up above 60% in the first half of 2018. Real estate prices also experienced large declines, with house prices and commercial real estate prices falling 30 and 40%, respectively, by the end of the third quarter of 2019. But notably, all of these adverse shifts revert back to normal after a few years. That's their stress test scenario. Actually sounds pretty legit. Real estate market crash coming into 2019, yeah. Stock markets, yeah, okay, well, maybe it wasn't a test after all. And sure enough, all 35 banks cleared the first hurdle of the Fed's stress tests. The most severe hypothetical scenario projects $578 billion in total losses for the 35 participating bank holding companies during the 9 quarters tested. The severely adverse scenario, the most stringent scenario yet used in the board's stress tests, features a severe global recession with the U.S. unemployment rate rising by almost 6% to 10%, accompanied by a steepening treasury yield. All right, so long story short, don't worry, we got this covered. Now, this is the same Fed. Bernanke, what happened? 2008, 9. We didn't see this coming. Remember Ron Paul? Do you think gold is money? Is gold money? Bernanke, no. Gold's not money? No. Then why do the central banks store it so much? Tradition. It's tradition. How come they don't store like diamonds or rubies or like pearls or something? Why does it go? Just tradition. Tradition. Don't you miss Ron Paul? He grilled that son of a gun. Man, I love Ron Paul. So the Fed that can't see, its butt from a hole in the wall, can't see things coming in advance, and the conspiracy theorists saw it coming in advance, raised the alarms. No, there's nothing here. There's nothing here. Then it happens. We didn't see it coming. What about all these guys that were telling you? Well, we can't listen to them. Who the hell are these people? They don't work here at the Fed. They're not the experts. We are. Right. And you didn't see it coming. We got that. And they did. So 35 banks will pass flying colors. And you know what'll happen? There'll be one little monkey wrench. When this happens, and it's going to happen at some point, there'll be one little monkey wrench. We didn't see that. We didn't account for that in the stress tests. How did we miss that, guys? Hope you've got some other ways of dealing with, potential wealth loss. Like, my favorite, cryptos. And I'm still a silver and gold guy. Hey, still got my silver. Still got my silver. But, you know me, I'm definitely a crypto guy. So hopefully when all this is happening, cryptos are the thing to pour money into. All that scared money over there flies over into crypto. And once again, cryptos are fixed assets, numbers. I think it's 84 million Litecoin, right? 21 million Bitcoin. That's all that will ever be created. Can't print anymore. Can't create anymore. Nope. So those of us sitting on them, being very, very patient. And you might have to be, you might have to be really patient for a while. But does it really matter how patient you were? Oh man, I thought I was going to be back in 6 months. Took a year. Took a year and a half. Oh my God. But then did it pay off massively at the end? Oh my God, yes. It was epic. Oh, so it paid off to be patient. More patient than you thought you had to be. Yeah, exactly. Take care. Try that again.